Hey everybody, this is Ms. Morgan. Today we're going to talk about the journal entries needed for purchasing merchandise inventory. Whenever you sell merchandise inventory, the first thing you would have to do is purchase the inventory. And so you're going to need journal entries whenever you purchase inventory. And so that's what we're going to talk about first. I'm going to use the information from practice exercise 6.2a. And it's just 2 sentences here, and I'm going to read those, and then we're going to create journal entries for you to see exactly what happens when a buyer purchases merchandise inventory. It says, Halibut Company purchased merchandise on account from a supplier for $18,600. Terms 210 and 30. Halibut Company returned $5,000 of the merchandise and received full credit. And then we're going to assume that Halibut Company pays off the liability. And so here are the journal entries that we would need to make. And you can see I've set that up here for the buyer. You need to learn the journal entry to record the purchase, the journal entry to record the return, and the journal entry to record the payment. So whenever I'm thinking about creating the journal entries for the buyer, I always create a T account for accounts payable. Need to underline here. And I'm going to go ahead and make a T account for merchandise inventory so you can see what happens to that account also. And I've typed out the information from the problem. The retail price of the original purchase is $18,600, and then we return $5,000 worth of merchandise. The credit terms are 210 and 30. That means that I can save 2% if I pay within 10 days, or the full amount is due in 30 days. So the discount is actually 2%. Well, in this chapter, we assume that the buyer will always take advantage of the discount. Now, you know that if the purchase price is 100% and we can save 2%, that means that my purchase price is 98%. So we're going to use 98% to calculate the numbers needed for these journal entries. You know from the first few chapters in accounting, whenever you purchase an asset, you debit the asset and you'll credit accounts payable if you purchase that asset on account. And that's exactly what's happening here. You're actually purchasing merchandise inventory. So that's your debit. Now, to figure out the amount of this journal entry, you'll key this in your calculator, 18,600 times 0.98, because we're not going to pay 100% because of that 2% discount. So once you key that in your calculator, I hope that you got 18,228. So your debit is to merchandise inventory, and remember the problem reads that we purchased that on account, so our credit is to accounts payable for that amount, 18,228. Now let's look at our T accounts. Remember, accounts payable is a liability, so whenever we owe money, it goes on the right side, on the credit side, 18,228. And merchandise inventory is an asset, and whenever you get more of an asset, that's a debit. Journal entry number 2 records the return of merchandise. Now that's just part of having a merchandising business, is that sometimes the buyers are going to return merchandise. And so here we are the buyer and we're going to return the merchandise. For a buyer, the return is the exact opposite of a purchase. In the purchase, we get inventory and then we owe money. But now we're going to return that asset, that inventory, and we owe less money. So we're going to flip journal entry number 1 for the amount of the return. Now we have to figure out our discounted price of that $5,000 inventory. So the first thing we'll do is you'll key in your calculator 5,000 times 0.98. Once again, you're going to flip journal entry number 1 when there's a return. So you'll debit accounts payable and you'll credit merchandise inventory. And hopefully now you have the amount. $4,900. And then you're going to credit merchandise inventory for $4,900. Now let's look at the T account. Now we're going to debit accounts payable for $4,900 because we actually returned some merchandise, so we owe less. And then we're going to credit merchandise inventory because that inventory went away. So now what I want to do is I want to figure out exactly how much I owe before I write the check. This is a very important step, and it seems to be one that people forget when it comes time to take the test, because you want to make sure that your credit to cash, when you write that check for this particular purchase, that you've taken into account the return. So what you're going to do is you're going to take the difference between the credit to accounts payable and the debit to accounts payable to find out how much you owe. When you do the math, it's $13,328. If you're taking notes while watching this video, you may want to write yourself a note here because you have to figure out how much you owe before you create the last journal entry. So whenever you pay off a liability, you actually debit the liability account, which is accounts payable, and then you'll credit cash because you're going to write a check for that amount, and that amount is $13,328. $13,328. Once you post that to this T account, you'll see that now the balance, I'm going to total it out, is 0. For merchandise inventory, if you want to know your ending balance, it will be $13,328 because inventory is always recorded at. Now, if we look back at practice exercise 6.2a, the instructions actually don't tell you to create the journal entries. The instructions actually ask you questions. It's easier to answer these questions if you've gone through the steps to make the journal entries. It says, A, if Halibut Company pays the invoice within the discount period, what is the amount of cash required for payment? Well, we just figured that out, and so the answer to part A would be this amount, $13,328. Part B says, what account is credited by Halibut Company to record the return? Well, if you're ever taking a test and it asks you a debit or a credit on a return journal entry, the best thing you can do is write out the journal entry, and then you'll see that your credit was to merchandise inventory when you recorded the return. Hope this helps.